Hi, I'm Sherri.
I'm Lana.
And this is Real Estate Tips with SNL.
Yes, it is. Today we have the one and only number one loan officer from Total Mortgage, Denise Peach.
Yay!
No, thank you for coming.
Thank you for having me.
We have so much to talk to you about because we learn from these podcasts ourselves. Mm-hmm. But being a loan officer, being in Total Mortgage, you didn't start there yesterday. So give us a little history about Denise.
Denise started in the industry about 30 years ago, and I did it part-time up until 7 years ago.
You? Part-time?
It was part-time. I was doing very little.
Okay, wait.
Really?
What's 7 years ago?
So, I know.
Right when I met you. That's when I went full-time.
I was like, I remember meeting you at a broker open house.
That was
over,
that was my first year with
Sue. With Sue,
yeah. That's when I met you.
Yeah.
Oh my goodness. Okay, so you were part-time.
Part-time. I was running an apartment complex.
That to number one.
The second year that I was a loan officer, I was number one at my other company.
Wow.
Yeah.
I think I'm speechless right now.
I know. You know, I recall having a buyer who was having trouble with the loan officer she was working with, and she asked me, "Can you match me to somebody else?" And I gave her your number, and it was a Saturday night, and she gave you a call because we were putting an offer in, and we needed this taken care of.
I remember who you're talking about.
Yeah, and you were you said, you know what? I mean, it's Saturday night. If we're both going to sit and have a sip of wine or do this together, you know, I'm here. I'm available when my clients are available. Mm-hmm. And I just remember how amazing that was because this person needed somebody to say, "I care." Mm-hmm. And you did it, and that was great.
Mm.
Yeah, I think we all have that same philosophy. That's why we work well together.
Right.
Yeah.
You have to work when the customer works, and that's not at noontime on a Tuesday.
No, or
it's Saturday
9 to
at
5.
7:00 at night is when they need you.
But there are those days I wish that it was.
I know. We all do.
So let me just go back. What apartment place were you? You said
I worked for 27 years as the property manager of Old Town Village in Air.
Really?
Yeah, I ran that and another complex in Rhode Island.
So wait a minute.
That was my career.
So you were doing that, and then why did you go part-time into?
Because I was a personal trainer at Neshoba Valley in Air, and one of the people I trained was a loan officer. And he said, "You would be perfect for this job." That was the old days, you know, back, that was 30 years ago, was when you had to read rate sheets and all that. And I'm like, all right, I'll try it. So I kind of dabbled in it, did a couple of loans a month, or one loan a month. And
Did you like it?
I did. I started to like it more and more.
Okay.
And then
Well, she
eventually
must
I got
have.
so busy, I said, I can't do both of these. I can't work 40 and 40. It was more like, 60 hours for loans and 40. So I went part-time in the apartments. And then I said, that's it, I'm going to open my own branch. And that's when I opened up Leominster.
But you were also personal training.
I was, but I gave that up too.
Oh my goodness.
Yeah, I did.
I feel when I got into real estate, I was doing other jobs and part-time and started like reducing my hours.
But that was
there
big.
and
There was
increasing
more
them
part-time loan officers and part-time realtors back then. When I first started, that was the majority. Nobody was a full-time loan officer. Or
There
realtor.
certainly are people who still do. I don't know about loan officers, but real estate agents that are doing it part-time. And I'm not sure how they're able to juggle everything because it is, I feel like
More
it's a
than
7
full-time.
days a week job. So,
Yeah.
but some people find success in doing it, on a part-time basis. But do you see that loan officers are also still part-time, or is it pretty much now it's an
It's a
all or
full-time
nothing thing? Yeah.
Because we used to be 1099,
Oh.
and they changed that 9 years ago.
Okay.
So it's a W-2, taxes come out.
It is.
now. Yeah.
Yeah.
So more people are in it full-time, I think, for that reason.
Okay, that makes sense.
Yeah.
Yeah.
So how long you been with Total Mortgage?
5 years.
No kidding.
Wow, it's 5 years.
Well, we invited you here today because we were hoping that we could talk a little bit about condos and financing condos.
Yep.
Just because it is so different.
But is it so different or is it not? That's what I want to get an understanding because
It is and it isn't.
Okay,
There's
that's
a lot
what
of
I was thinking.
misconception on condos, on either direction. One, a lot of realtors will take a pre-approval for a single family and
Okay.
think they can go shopping for a condo without asking me.
That was on my notes because that's a big no.
It's a
isn't
big
it?
no.
Don't
because
do that.
my pre-approvals will say condo,
Mm-hmm.
and it will have a max condo fee on it. Because you guys know, condo fees could be zero,
Mm-hmm. Yeah.
or they could be $780.
Yep.
And they could be right next to each other, different complexes. So I always specify in my pre-approval template, if you are interested in a condo, please reach back out to me and I will calculate a pre-approval for a condo. But I've had it happen where I've gotten an offer from somebody that they were pre-approved for $300 for a house.
Yeah.
Usually chop off 50 or 60 grand for like $350 condo fee. That's a big difference. So now they go from a $350 pre-approval to $290 for a condo. And they're like, well, what do you mean I can't buy this? You can't. You're not
Because
approved.
the consumer forgets about that condo,
Condo
fee.
fee, yeah.
Is a big, and we've noticed in the market the condo fees have been increasing.
Yes.
Right.
And
Yep.
reasons for like assessments, but also
Well, that's
just,
the big, there's a lot of assessments. We were
special
just talking
assessments.
about
Yeah.
one. That
Yeah.
adds up.
yeah.
If you can pay that up front, like I told you, there's a way to get
Yes.
around that. You pay it for the year up front, the assessments, if it's only for a year or two, then we don't have to debt the monthly for it. So,
Now
Can you
this
roll that in as a closing cost?
yeah.
So like if they want to pay off the assessment, they can do that?
Mhm. If
Sorry,
they have a
Sherri.
seller
No, that's
credit.
okay.
Yeah.
This year, I noticed, and my approach towards condos, and townhouses, I mean, it's all kind of the same thing, has changed because master insurance, and I wanted to touch on that and then kind of bounce back. So could you explain what happened with master insurance plans this year that sort of changed things for condo financing?
So FHA always followed this same rule, and people don't know that because a lot of people don't, and we'll talk about FHA financing for condos. But what Fannie did was they decided that they didn't want these huge deductibles.
This is Fannie
on
Mae,
Fannie and
Freddie
Freddie,
Mac.
conventional,
Yeah.
right? So this is strictly Fannie and Freddie, no government, no FHA, no VA, USDA.
Okay.
They basically said that say the whole building coverage is $5 million.
Okay.
It can't, the deductible can't be more than 5% of the total policy for each unit. So you basically would look at the policy, say it's $5 million.
Yeah.
The coverage, multiply that times 5%,
5%.
and then divide it by the number of
units.
Of units. And that's got to be the max deductible. So the deductible could be $25,000 per unit, but when you do the math and it comes out to 12, guess what? Fannie's not going to take that policy. Now, there are some cures for that. Not all lenders have jumped on this wagon. So if there's 3 different things you can do if it doesn't pass that. They can either go to the condo place and ask them to change their insurance. What's the chances of that?
No.
Not in
Pretty-
the, not in
pretty
the
nil.
current year, yeah.
No, pretty
Pretty
nil.
nil.
Yeah. Or there's some verbiage that we can ask them to add to the binder that says, we will not charge more than, 5%, blah, 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 if there is an occurrence. Which kind of just contradicts the formula.
Right.
But Fannie will accept it, Freddie will accept it.
Okay.
Oh, that's helpful.
Okay.
Now, I know that what made this change this year is that a lot of insurance premiums went up.
Mm-hmm.
And correct me if I'm wrong, my understanding is that a lot of these, condo management companies or boards or whomever that were making these decisions didn't want to raise their monthly rates with the homeowners, so instead what they did is increased the deductible to help offset the cost of the higher premium.
Yes, that's
which-
exactly what happened.
That's why suddenly we were in a situation where we needed to see the master insurance policy.
Mm-hmm.
So now I'm going to speak to people who are selling a condo, and hopefully it'll correct itself within the next year or two. But if you're selling a condo, you need to provide your listing agent with a copy of your master insurance policy, but also your financials, and that is your budget.
Budget, yep.
Your you need meeting minutes. You
Well,
need,
the meeting minutes you will need if there's some issues that come up on the questionnaire. But it can't hurt to get that up front. You should
Yes.
always have that up front because there's nothing worse than getting condo docs 3 weeks into a deal to find out the
I
deal's
know.
no good.
Yeah.
When that could have been solved in the first 20 minutes, at least if I'm looking at it, I'll be able to tell right
and
away
that's
if
a
it's
fail
not
for the
warrantable.
buyer and the seller.
Yeah.
you know,
It's
and-
totally.
very hard for the seller.
Yes.
Yeah.
Yeah. And yes, they have to come back on market. Now, non-warrantable condos. So if it does fall into this category and it's not something that you're able to correct with verbiage or a change to the policy, then the condo itself is considered non-warrantable. Is that correct?
Correct. It's just
And
like
how
the
would you
old, like the
describe
old
that?
days. So non-warrantable means it doesn't meet the agency guidelines, Fannie and Freddie. So there's certain things that Fannie and Freddie require. As a lot of this, you guys know, the budget has to have at least 10% reserves. There has to be so many units if it's an investment. It
I
has
know,
to be
she said,
owner-occupied.
you people know this.
And we're
Write it
writing
down.
notes. We're writing notes. I don't know what she thinks we know. Like we're supposed to know this stuff. So
I
wait a
just
minute,
give it to
10%
Denise.
reserves.
10% reserve on the budget. That's
Yeah.
the biggest thing I see fail most of the time. And it's just an educational thing because they might put it on the wrong line item or they didn't realize it had to be broken out on the budget.
okay.
And some of the bigger complexes, they already know.
What's the
and they have
ratio
it.
for owner occupied? What does that have
There
to
is
be?
no ratio anymore.
We don't have ratio.
Now the problem
only
is
if someone's selling,
sing-
buying it as an investment, then it's 50% have to be owner occupied. But that old rule that 50% had to be owner occupied is not with Fannie and Freddie, but it is still required with FHA.
I thought the problem was if one person owned multiple
That's also an
units.
issue. It depends on the number of units, but 1 to 4 units, only one person can own more than one unit. So basically, can only be all owner occupied. And then from 5 to 20, no more than one person can't own more than 2. And then,
her notes
yeah,
here,
20, I know, because there's so many numbers. So 20 units, anything over 20 units can't be more than 20%. One person can't own more than 20%. So obviously, the bigger the complex, the more someone can own it. But, there's some places out there that one person owns like 50%. I mean, you're not even, there are outlets for non-warrantable, but when they get up into these weird numbers, even these non-warrantable places aren't going to do them.
I used to live in a complex that originally was built as rentals. So the builder, had ownership of the entire complex, and then over time started selling them as condos.
I know which
So-
complex you're talking about, because that
well,
was...
there's more than one in Leominster.
There's a couple of them, yeah.
And then that's where that non-warrantable piece came, and you just had to get a number of units sold
To that point.
in order to, yes.
Yes.
Yep.
Yep.
So I guess, are you seeing that since this ruling change for the insurance thing came in, are you seeing that the condos are changing and catching up to this because of the sales, or nothing's changing? Like
They
no one's
haven't
big-
caught on yet. Just
No.
like, remember the new condo questionnaire with the addendum that nobody was filling out about the structure? They're finally, condo places are catching on now to that now, and that's been 2 years. So they haven't caught on to this. Like I said, there's fixes. It's either they change it or there's certain verbiage, or if there's some kind of a special, it's hard to explain, but if they have like ice and water, hail damage or something, if it's a certain area in New England, there's so many parameters it usually doesn't happen that they allow the homeowner to get their own policy.
Oh, right.
But then that's going to cost them
Yes.
thousands
Yes.
of dollars. So that's just another, it's a fix, but unlikely.
So you were saying about conventional right now. We haven't even tapped on
Yeah, FHA is a whole different animal.
and VA.
And VA. Well, VA, FHA, this is another thing I hear very often. I just got a text this morning. Can you tell me if this condo is FHA approved? And I said, there is no
There's none.
condos left FHA approved. They don't do that any longer. It's only on a case by case. This was back in the day, but they called them spot approvals. That's what they call them now. And it's just done on a case by case basis.
But you're still doing spot approvals.
Still doing that. I close 3 or 4 condos a month in FHA.
Nice.
It's very common, and everybody thinks like it's this long, drawn out approval process,
Right.
that FHA goes out to the unit. It's literally, the biggest thing is the HUD questionnaire has to get done within 24 hours, because that's how we know if it gets spot approval. Send that in to HUD, and in 24 hours, you know if it's approved. Simple, very simple.
And VA?
VA, they still have the good old list. They have to be on their list, or you can't.
Okay.
So they have a lookup,
Yeah.
and there is no process of like if there's one not VA approved,
Yeah.
to get it VA approved, you can. It's just it's a big process.
Yeah.
Well, I have a buyer that's interested in looking at a condo, and I'm asking the listing agent
Yes.
for these condo docs, and some of them aren't really, aware of what they need to do, and then I'm just contacting the property manager saying, "Can you send them over to me?" And then my offer doesn't get accepted. Come on,
Right.
I just did all your work.
I know.
Let me
I
ask
know.
about
So
this
frustrating.
lender questionnaire.
You
Is-
might wanna
That's the
shut
hardest.
phone off.
That's the hardest one. Oh yeah, I do have it off. It's my headset. The condo questionnaire is one of the most important thing to get done. I mean,
So
that's
how
how it's going to have all of this stuff that we
Right.
talked about right there on 3 or 4 pages.
But is there a standard form, or does the bank require their form?
There is a standard Fannie Mae form.
Okay.
I would say most all lenders will take that, the
Most,
standard
but
form.
not
So
all.
where do we
Yeah.
get that to have that to our client in advance?
I can send you a copy. It's a standard Fannie Mae questionnaire.
Because I think that's the hardest thing I have been putting on mine, that it's going to be the buyer or buyer's lender's responsibility to get that, because I feel like all of a sudden the lender, and not anything specific, they'll just throw it out sometime in the transaction. I would think you want it immediately
Right.
out there, because I'm like, wait, someone's got to get this.
Well, do you remember those days when we had a condo that you put in an offer and it was who's responsible for the condo docs? Is it the
Yep.
seller or the buyer? And you would write it in the offer, seller to provide it. And if you didn't, then it was assumed that the buyer was going to,
Yeah.
and pay for it. Because
Right.
sometimes there's a small fee.
Fee.
And now I just feel, and maybe that was, my inexperience from years ago dealing with this, but now it's just, get these documents up front when you're going to list it. It's going to save headache and time for everyone
Yes.
involved. And
So that's good to know to get that, because I thought, in the past I had to use a specific form from the specific lender.
Well, some
there are
condos will
some
have their
lenders.
own,
Right.
They have their own version that's filled out with everything that they need. Some of them haven't caught on to the addendum that was added, and you ask them to fill that out, and guess what they give you? NA. You can't do that. If they won't fill out the structural questions because
they don't know.
they don't know, or they
Yeah.
don't want to take responsibility for the structural questions, that's when the media minutes come in, and you need all that stuff.
And I think this is the gray area too. You're going to have some lenders that are going to require their own form.
Correct.
And you're going to have some, condo property managers who just won't participate
No.
in that. And, and I feel like both are blocking a sale.
Yeah, they are.
And I
they
think
don't
it's
get it.
important for the client or the owner to get that information, because they are an owner
Yes.
and they are paying
Yeah.
their condo fees. So they have every right to ask
Correct.
for this information.
And oftentimes there is no fee, with the exception of the questionnaire, but the other stuff it's at their fingertips. They just
Right.
need to get it. But
Sometimes
if you're the
they charge.
outsider, you're usually paying a fee. But no, if you're a condo owner, you should have access to that budget every year. That should be given to you every year.
Right. No, I agree.
All right, there I was angry.
That's your anger?
That was my.
Wow.
I'm ready
Wow.
for that rage room now.
I keep telling.
She's not Italian.
No.
I am Italian.
Oh, you
No,
are?
she's a
I
happy
am.
Italian.
I am.
Oh, I didn't know that. Wow.
Oh, limoncello, let's go.
All right.
Okay, so we talked about a lot here. So I like about hearing the pre-approval. That's a great. I mean, I read mine thoroughly, because I also want to know if I'm missing a contingency
Yep.
that is not written in the offer. I'm reading those things with a fine-tooth comb. But what other things do you find that are going to come up and changing down the pipeline? Have you heard anything else for condos, or is it pretty much?
No, they spring stuff on out
They
of
do?
nowhere. I mean, we find out 2 days before it's going into.
Is there any requirement for like a down payment, or depending if you can do FHA still, you can do. You tend to see that it's better for buyers to do a higher down payment. A different program is better for them now.
I mean, it just depends.
Okay.
There's so much. there's so many, like first-time homebuyer programs, there's so many. We offer a lot of down payment assistance. There's different programs. I mean, things are more flexible now, and hopefully with the rates hopefully coming down, there'll be more opportunities, more buyers. But
What are the rates today?
the rates rates were great last week. This week, not so much.
Because I kept seeing drops. I know that
They shouldn't
don't
put
look
that
at your
out there.
retirement account right now.
I know. Don't
Do
look
not
at
look
that.
at it. You know, this is it's August 6th. We're taping this. Yeah. So, but I was seeing, you know, some people posting, and I never know when you see rates posted if it's at points or
Or if it's
you know,
a 15-year, that's the thing. They don't look at the
yeah.
fine line. They say, "Oh, I saw 5.9%." Yeah, but that's a 15-year.
Yeah, there's more to the story, but I was seeing low sixes anyways, and
yeah.
I think, is that fair to say?
Probably
or-
not after today and yesterday. No.
Okay, all right. So don't look now. No. You know,
That's why when rates start to go up, it's slow to hit the news. But when the minute rates on one day look good, it's all over the news, and then
Right.
everybody's calling. I heard the rates went down. Well, did you breathe? And the day opened on Monday, and it totally changed. So,
so are Mondays bad and Fridays good?
it's totally opposite.
or-
It's normally Fridays the rates are worse than on Mondays, and this last week was the opposite. It was a fluke thing on Friday. Nobody even knows. There's like we usually know why. You know, when the rates went with COVID and all that, but this Friday there was no. I mean, there was some economic data that came out. It wasn't like earth-shattering differences.
I think
from the
I would say
forecast,
we were
but
expecting it. We were
Yeah.
expecting it. Yeah.
But
knows?
let's look at the history of real estate. We're still at a low of the average.
my first house was 18%.
I know. But if you go back even 20 years, the average is not 6. 6 is low.
No, 6 is still low.
And
the average rate, I think, over the life of interest
Yes.
rates being tracked is like 8.75.
Yeah, I was going to say
I mean,
it's in the
that's
I'm listening to a book on finance on Audible, and the book itself is, I don't know, maybe 15 years old. And in the book, it was giving examples of how, you know, when you should, you know, invest higher into your real estate, or, you know, maybe making double mortgage payments or whatever. But it says if you had a chance to lock in at 5%, then, you know, maybe you're, you know, just going to make the minimum payments because that money could be used elsewhere.
Yeah,
And
makes sense.
and you know, it was like, wow, a few years ago when we were at 3%, and now 5% really could be a year from now. We'll be
Oh,
back in
it
those
could be,
numbers
yeah.
again.
I mean, that's what they're projecting.
Right. Do
But
you
who
do
knows?
you think it'll ever go? I know a lot of my buyers still think this ever go down to 3 again.
I don't think in my lifetime, or lifetime as a loan officer, will probably be the same.
I mean, that was more, you know, pandemic and
Yeah.
all of that. So,
Yeah, the stars just aligned. I mean, and
Yeah.
it was the biggest drop in a 7-day period ever seen in history. So, I mean, we were in the 6s, and then we went into the 3s, and then
Yeah.
some for a period of time in the high 2s. But I don't think that'll ever happen again. Me too.
me
I lucked out. We were smart.
Yeah. Well, sometimes we win and sometimes we don't, right?
No.
Hey.
yeah.
Yep.
Yeah.
Well, what else on? I want to ask about condo fees. You and I just went through this, so I want to know what is beneficial to help you. Condo monthly regular fees. If there's an assessment you like to see that is attached.
Yeah,
on
not at the bottom in the remarks, because I mean, yeah, should I read that listing all the way through? But I just look at the condo fee, and it should be listed there somewhere, like, or, you know, see comments for assessment or something that brings you, because I would have not known that
Right,
if you hadn't told me.
So
and that I had a borrower that would have qualified, and they didn't once I
Right.
added in the assessment. So,
Yeah.
Well, and sometimes the seller, you know, it might be an estate sale, and they don't have that information,
Right.
and they just don't
Yeah.
know.
Right.
But if we have the means of reaching the people that do have the answers,
Right.
that's helpful.
Right, right. Because I think assessments I think you're going to see, especially, you know, around our market area, we've had complete renovation in a lot of our complexes. They were
well,
built
because
in
of
the
these
1980s
questionnaires with these
Yes.
addendum now, they're asking about structural. So a lot of these condo places like, listen, we're having to answer about this stuff. We better start putting money aside to do it. if they don't already have a reserve account.
Well, it was
So-
a big condo boom, in the 80s, right? So, those are all aging. So you've had those, the master plan where they're replacing roofs and siding and...
They're on their second round.
Yeah, yeah.
But also, I think is good to know, and everybody up to speed. When I say everybody, like associations and whatnot, because the 55 and older community is really, really important. People are looking for that, and they usually are a condo association, not necessarily townhouses side by side, but they could be a duplex side by side or something like that, or they just they're on land that is owned by the association, right? Those kind of things, and I think that's really important too, because that's going to be repeat. We have, that's going to keep happening, and I don't know. I think that education for all these organizations, the associations, to understand what's going on, to finance.
Right.
It's not all these cash people that are, cashing out on the 30 plus years they've owned their house with a ton of equity, and they're going to...
They don't exist anymore.
No.
Yeah, you hit that. It would be great. You need to start visiting these property managers.
Yes, and educating them.
And giving them some little seminars on here's what you need to get these places financed.
Well, and think about that. It's only going to
would love
get
to.
them... the structure is going to be ready. It's going to be financeable, which is only going to keep value in the place. So it's only going to keep it moving and doing better.
Yeah, yeah. I had one that that I had sold earlier this year that had that master insurance policy issue. Did sell it to a cash buyer. But when I talked to the president of the association, who was another owner, they didn't quite understand about what was happening with that. And, they kind of heard a little bit, but didn't really make sense. So, I was trying to educate that person, knowing that change was not likely to happen this year, but going
they're
forward...
going to run into the same problem as a seller.
But going forward, they need to address it. And nobody wants their condo fees to go up, but you sure as heck want to be able to sell your condo,
Right.
So, those are things that... you need to sort of weigh, maybe you're not planning to sell for a few years, but wouldn't you want your value there?
Right.
So, yeah. All right. So condos, single family.
We could talk for 3 hours about condos because there's
really
so many
could.
ins and outs. It's just so different. They're different, but they're not different. As long as you're educated and the agents understand, a condo pre-approval is not a single family pre-approval.
Right. So
Then
if you have
it's-
your pre-approval for a single family and you start shopping for a condo, talk to your loan officer
Yes.
and
Get
get a
in.
second pre-approval.
Yes, I will give you 3 if you want a multifamily. I'll give you how many you want,
All right.
And I'll be working at 9, 10, 11, 12, 1, 2.
and I'll answer.
On Saturday night.
Yes. After 9, I might have a couple of sips of wine, but
Yeah.
I just might get a better rate.
Yeah.
Well,
there you go.
Exactly.
So now we know Saturday night's actually
There we
the best
go.
night. Yeah.
There
It's
we
a better
go.
night.
There we
Funny.
go.
Well, this was
Very educational.
yeah, very helpful. And I for one, I took some notes here, so I did learn a few things.
Well, I have some great sheets I'll share. This is a cheat sheet that
All right.
gives you the differences in the condo financing with FHA, Fannie and Freddie.
Nice.
trying to
and
read
it's-
your handwriting.
Yeah, don't look at my chicken scratch. I'll make this a little bigger because you have to have bionic eyes to read it. But I'll give you some, and then the insurance cheat sheet, which kind of tells you the formula
Yes.
and then some of the verbiage
Yeah.
that can be added and whatnot.
Yeah, that would be great. And if anybody wants that, reach out
reach
to
out
Denise.
to Denise Peach.
Or
Peach at totalmortgage.com.
D Peach. I love
the
that.
Peach team.
The Peach team.
I
Yo,
love
yo.
it. Yes. So thank you so much
Oh, thank
for
you for
coming.
having me.
And it's
My pleasure.
everybody. It's Denise Peach, Total Mortgage, and you can reach her so
All the
many
time.
ways and every hour on the hour. Well, that was great. So I hope that you found this information helpful, and we would love if you subscribe and check out our other podcasts, and then also give us some feedback. What would you like to learn and hear about? We're happy to help and give you the information.
Yeah.
And
Yes.
if you
Great.
want to bring Denise Peach back, put that on their comments.
All
There you
right.
go.
All right. Bring back Denise. All right. Thank you.
Thank you.
Thank you.